Hey, good morning, everybody. Welcome to Tuesday, July 23rd. I want to thank you for joining me today. And for those that have continued to join us, I really want to thank you for your continued support as we continue to produce this segment with Dave every morning and repost it out there on Facebook. So, again, as we get ready to get started, before Dave pops on, we continue to see the markets. Last week was a little down, but this week we're off to a decent start. So I want to remind you about our free report on retirement strategies. Folks, listen, retirement is a one and done deal. So you want to get it right when you go into retirement. And so we've put together these 5 strategies that you need to look at when it comes to retirement. Get your free report. All you have to do is text the word retirement to 863-285-3815 or click the little link above this video. It'll take you right to the page. Dave will be with us in just a moment.
Bam, good morning. It is 8:38 here, 22 before 9. Let's check in, see what's happening on Wall Street and elsewhere. Other things affect your 401k and IRA as well, like this morning, including London, as a matter of fact. Downtown Sebring, we go to the offices of Statler Financial Services, where Phillip Statler is standing by. Phillip, good morning. How are you today?
Good morning, Dave. Hey, doing well today. We got the week started off, I think, at least on the right foot yesterday.
Yeah, it was kind of nice to have green ink for a change after kind of a crummy week last week. Kind of leading into this discussion with something we said before we went on the air, even if they don't necessarily like what's happening, investors like certainty, and that seems to have been firmed up on 2 different fronts this morning. Number one, the president and Congress appear to have a deal to avoid a government shutdown, raise the debt ceiling, and kicked all those balls across the goal line to at least pass the 2020 presidential election. That always is that brinksmanship game they play. It's always upsetting the stock market, and actually getting it done with a month to spare, that's almost reason to break out champagne in Washington, even if you don't like the decisions they made.
Well, I think you're right. The one of the issues we've always had is that they wait until the very last minute to get some kind of debt ceiling passed, and so them being able to come to some kind of agreement well in advance of what they really expect to happen, I think is good news for the market as a whole.
Absolutely. I mean, folks that tend to look at the federal budget deficit and saying, oh, my Lord, it's spending like drunken sailors. Yeah, the decision was to continue spending like drunken sailors, but at the very least, they aren't going to hit a brick wall on the federal budget. And given the history of President Trump's willing to shut the government down, I got to believe that if we were playing brinksmanship this time around, it would be real upsetting to the financial markets. So while I don't necessarily like the result, I'm kind of glad to see them at the very least get it out of the way so that doesn't get away.
Well, yeah, it's a news cycle, right? Like now people can, it sounds like probably a year or so, and get us going and focusing on what needs to be done.
Understood. The other thing that's the notion of certainty beats uncertainty. Over in Great Britain, the Prime Minister's position appears to be going. I can't remember Boris anyway. He was one of the. And there's kind of a show there. I was a little bit surprised to see him head on. I expected that to have a negative impact on the European markets, but the German market just went through the roof after that announcement. So comes under that heading again. The more certainty you get, the happier the markets are, even if they don't like the results.
Well, that's true. I mean, Boris Johnson's the guy's name, but he says by October 31st we're going to get Brexit done. And I'm thinking back to the struggles that the last prime minister had, and yet no exit strategy was put in place. And so I got to wonder, Dave, can he really make that happen? Can he live up to that promise, given, their Congress, to me, is a lot more difficult than ours is. And so can he really get a plan put in place to exit Brexit?
That's true. And the biggest challenge that they've got over there is that, it cuts across party lines. His own party is not exactly unified on Brexit. And heaven forbid the Liberals and some of the other ones aren't in favor of it either. Getting anything through that House of Parliament is rather like pulling teeth. So herding cats might be a better description. It's but at the very least, there's there's now at least an adamant leader in charge and going in the direction that at the very least folks feel a little bit more certain of. So European markets are up this morning on that news, which, as I said, kind of surprised me. Over here, we're in earnings season, and one of the categories that we talk about a lot is the toy industry, because it's fallen on, alternatively, chips times and hard times. Hasbro right now is in the chips, I gather.
Well, it is. Hasbro came out and reported, which means Mattel is a few days away from reporting. But they had a great quarter. They beat by about 28 cents a share. Revenue was also exceedingly well above forecast. And here's the deal. It's always, like you said, it's usually linked to some TV or movie or something. And so for Hasbro, it was related to the Avengers Endgame, among other factors. Yep. That was.
Yeah, you got the Avengers. You've got a license to make money for the short term this year, don't you?
They do. And so that really pushed their last quarter. They're trading up this morning a great 6.1%, which will actually
over the last couple of years, watching these two factors, a little bit of a zero sucking the auction of them. There are not Hasbro was saying, we'll buy you at a junk sale if you're not careful.
No, that's right. I remember that too. They get into this buying technology stuff, and so we'll see what happens with Mattel, and that'll kind of give us an idea how the toy industry is really doing across all the sectors. Another one we have that was a significant beat today. Now their stock's not getting a huge increase. Is Biogen, the drug maker. They had a great quarter. They had a lot of growth in their multiple sclerosis drug. That was a big help for them. They beat in both revenue and in earnings per share. Earnings per share came in like almost, not quite, but $1.50 or so above what was expected. And they raised their full year forecast. Like I said, they're up, but they're not like Hasbro. They're up about 1.5% this morning before we get started.
Once again, it sounds like investors are reading a little deeper into the reports and saying, oh, this is the riches that come off of one or two drugs. That's not a solid enough footing to really buy them like chiclets for the moment.
Well, no, but yeah, right, because it's really dependent upon pretty much that one drug that's been a full force for them. Hey, on another one, we had Pepsi the other day. Now we have Coca-Cola coming out.
Yeah, how'd they do?
Coca-Cola beat by 2 cents a share, which was good. Revenue was above what was forecasted. And here's the other good component for Coca-Cola. They raised their full year forecast. They're seeing a lot of demand growing in their new soft beverage drinks and their coffees. So they've got two different fronts that are kind of picking up some steam. And so they're up this morning 3.3%. And they, like Hasbro, will open at a new 52-week high at the rate they're going right now.
I figured that probably had to be good news because they're up there on my big winners list this morning. Other indicators we got. I know you mentioned that we had one of the discount stock trader firms that was out there. TD Ameritrade reported?
Yeah, we had TD Ameritrade come in. They beat by 7 cents a share. Their revenue also beat forecast. And so good things there. However, on another note, their CEO, Tim Hockey, who's been there, I think about 3 years, is stepping down once they find somebody to kind of take his place. And so they're down a little over 1% this morning. I'm thinking that may be based on the news of the new CEO search that they've got going on.
When you start getting into a commodity thing like discount brokerages, I got to believe the CEO probably has a pretty substantial impact on the firm.
I would think so.
Not really a big difference between them. If you're going to do a penny a share trade commission or whatever the number is, it's kind of like buying a commodity. The marketing savvy of the CEO has to count for a lot.
Yeah, that's probably true. And so who knows? Their replacement may be a barn burner that raises their stock price just based on that purchase. We've got two misses that I want to talk about. The first is Travelers Insurance Company. They're huge property and casualty insurance company. They missed by about 26 cents a share. Revenue did beat on forecast, but that's mostly because they had higher investment income and higher premiums coming in. But they saw higher non-weather related losses this last quarter, which affected them. So they're down about 1.5% this morning.
Ouch. And I'll bet you the other big loser that you're going to mention is our favorite motorcycle company, huh?
It is. It is. We got the hog, Harley Davidson. They beat on earnings per share, Dave, by about 3 cents, but they missed on revenue. And the dagger to me, they cut outlook for motorcycle shipments, which is not a good sign for Harley Davidson. They're trading down this morning about 2.1%.
It's not a pretty sign. That's always a difficult line to sell. And Harley's had some. They've had some up quarters. I can't say that they're dead meat or anything, but they've got some challenges, don't they?
They do. They do. And I'm sure that I'm thinking anyway that the trade thing may be hurting them, as well as just the maybe a little bit of a slowdown.
Well, they also got hammered a little bit politically when they made an announcement of moving some of their production overseas. After we started this tariff trade war, they got hammered from the executive branch of government, too. So they kind of have both sides of the political fence looking at them askance, and that doesn't help them politically either. Setting the table for this morning, we were green yesterday, not by a monster amount of the Dow and the S&P, but up. The Dow was up by 17.5. Standard & Poor's was up by about 8.5 yesterday. NASDAQ, Phillip mentioned, was the big gainer, up by 0.75%, up by over 57 points. 45 minutes before we open up the markets this morning, Phillip, I'm looking at green ink. It looks pretty solid too, doesn't it?
Well, it does this morning, Dave. We are seeing some pretty good strides. Everybody's up about almost 0.4% or better. The Dow's up 106. The S&P 500 is up 11.75 right now. The Nasdaq's up 39. We got gold slipping just a tad, about $1.60 an ounce, and we got silver continuing to make its climb, up 0.5% this morning to $16.49 an ounce right now. And then we've got crude oil heading down a little bit this morning at 56.01 a barrel.
Take that as good news any day. Overseas markets, the Asian rim generally up this morning. Mentioned earlier, I was surprised that Europe is reacting positively. German markets are up by almost 1.75% after the Boris Johnson announcement. Britain's markets also up by better than 1%. Again, certainty beats the crud out of uncertainty, even if you don't necessarily like the guy doing the job. Phillip, somebody want to find out how to stabilize one's retirement, maybe capitalize on some of these moves too. How do I make an appointment to get an X-ray report with you?
Hey, it's a great time right now to get a financial X-ray analysis on your current portfolio. Actually, it's very important given where the market is, especially if you're 5 to 10 years out from retirement or you are already retired. And so give us a call at 382-0037 to schedule that financial X-ray analysis. And then always, we got free reports out there. Right now, we're doing our retirement strategies free report. All you have to do is text the word retirement to 863-285-3815, and then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings, and coming soon, earlier on Saturday.
I was going to say, a new bonus broadcast coming soon, right?
That's right.
I got you covered. Phillip, thank you so very much. We'll catch you tomorrow morning. Fair enough?
Fair enough, buddy. Thanks. You have a great day, and I look forward to tomorrow.
Thank you much, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Stop it.
Hey, guys, again, I want to thank you for joining us today. If you like what we're doing, please like our page on Facebook at Statler Financial Services and share this video with your friends. Again, that free report, all you have to do is click that little link right above this post to get your free report on retirement strategies. Until tomorrow, have a great day.